Welcome everyone to Femex Trading Trench episode 3. I have KoroushAK at KoroushAK. You'll see that on the screen here from Twitter. One of my good friends and an awesome trader. Not only that, he puts amazing content out on YouTube and Twitter. Great for education, all free. So make sure you check that out. He also has an awesome podcast and a newsletter called Market Meditations. So make sure you check that out, and he'll talk more about that at the end. But Koroush, thanks for joining me. I'm really excited to have you here. I'm really excited to learn from you. And just tell us a little bit about yourself.
Well, Gunnar, thanks for having me on. I'm honored to be on this podcast. You were the first guest on my podcast like over a year ago now. And
crazy.
Time flies in the crypto space. It really does. You gave a pretty great introduction, guys. My background is hugely trading focused for my first 4 years in crypto. And then the last one, I've been really focused on working closely with projects from the incubation level up until just advisory roles. I'm really keen on helping build different ecosystems in the space right now. I'm hugely bullish on crypto in general. And that would be my background. I still trade lots. It's something I absolutely adore. My newsletter, Market Meditations, was something I built for myself first. Actually, I don't know if you know this, Gunnar, but I spoke to a few traders and I wanted to level up my trading, take it a little bit further. And as a mathematician, all I used to do is isolate data and look at the charts and absolutely nothing else. And this was reasonably good, but some people were absolutely outperforming me with high conviction bets that they believed really, really strongly. And I couldn't understand because I'm like, the numbers don't tell me that. The chart doesn't tell me that. And what they were doing is looking at the fundamentals behind the chart, like looking at what these projects were doing, what the hot news events were. And that level of confluence took them up to the next level, which is why I hired a team to start researching for me and finding this stuff out. And that eventually turned into the newsletter, which is the other big thing I do in the space. And I decided to release that for free for people. That's a summary of what I do. I'm sure I've missed some stuff, but it'll give people a general idea for this episode.
No, that's awesome. I think you kind of nailed it on the head. And a lot of people don't understand that there's a fundamental analysis side and a technical analysis side. And some people do both. Some people just do one very well. But it is great, and you can take yourself to the next level a little bit if you understand both of them. Not only that, during certain market conditions as well, like if you were around in 2017, 2018 alt season, somebody would announce a mainnet launch and they would go like a 5x in 24 hours, right? And even right now, we're seeing bullish news carry more weight and momentum on the charts than we were seeing a year or two ago. Back in 2018 bear market, somebody could announce something super bullish and you'd get a 5% bounce and then it would sell off immediately. And now you're seeing a lot more action or reaction in the charts when there's bullish news. And then negative news is actually doing just almost nothing.
Yeah, you really do see this. And there's like a bit of a two-pronged approach over here, because on the one hand, you can look at the charts, just like we did in the blurb before this episode, and spot a strong uptrend where you see continually new higher highs and then the lows progressively going up. You see the price moving upwards in straight direction. Then you can see there's an uptrend. Then throw your Fibonacci tools on there as well and see that it's not retracing much either as it's going up. That's one means of spotting it. But another is if you see the price going up, and now you're seeing mainstream media constantly talking about crypto. You see new updates coming out every single week. You see people get obsessively married to certain narratives or stories about assets that are going to do well, price predictions getting more and more ridiculous. As you go through more and more bull markets, you get to spot these signals. And it's pretty difficult because the signals that show you it's a bull market are often the signals that signal the top of the bull market as well.
True.
Identifying these conditions, getting really good at identifying these conditions is one of the most important skills a trader can develop. And you can't just look at one resource. It can't just be the charts. It can't just be the news. Let me scratch that. I know a lot of people that succeed with just one or the other, but the majority of people I've seen succeed take a very all-encompassing approach.
Yeah, I agree. I mean, once you master one, you may as well start at least learning the other one and using it to your advantage, even if you're not that great at it. I'm terrible at fundamental analysis, but I still use it to my advantage. And I understand the market conditions and what they are, So, and it also depends on what kind of asset classes you're looking at. Like if you're looking at very low market cap assets, you want to find something with very, 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 very strong fundamentals, because if they don't have the fundamentals, the price swings can be, extreme in no time. And a project with heavier fundamentals that's in its infancy is going to have a lot more stronger community and stronger hands in the beginning when those price swings can be so dramatic.
Yeah, I'd love to jump in there, and compound a bit on what you've said. It really, like, say you master just reading the charts and you get pretty decent at trading. I'm sure a lot of people listening are into self-improvement and familiar with the 80 for the 20 rule. 80% of the results can be grabbed with 20% of the work, and the final 20% takes an extra 80% of the work. The 80 for the 20, the fundamentals, if you're just looking at the charts, is just keep a general temperature on the news. Like once a week, or better yet, once a day, just spend 5 minutes. It doesn't have to be my newsletter, any news source. Jump on a website, something you like, just the Twitter feed, and keep a temperature on what the market sentiment feels like, what sort of headlines you're seeing, and you've already got extra data that can help inform your decisions, and then you can take it as far as you want after that. But there really is a huge amount of 80 for the 20 to capture that. And then you spoke about the smaller projects, and I think you made some really great points about how to benefit hugely off of them. One of the things I found to be, and this is some alpha for anyone listening, one of the things I found to be the most beneficial when finding these early stage projects is be really careful with them in a bear market, because you can get trapped for a long time in an illiquid position that who knows if you're ever going to be able to sell. In the space of a 1 to 3 year bear market, so many things internally that are completely out of your control can happen with a team from just a dispute between the team members, which makes the project break up, that can get you trapped in there. But that's when you're trying to find real long-term gems. In a bull market, the reality doesn't really matter. It's only the perception that matters. And you can spot the perception of people by spotting narratives and trends. Now, you mentioned 2017, Google. Let's go back to 2017. What did we see in 2017? What narratives were hot? Well, the new Ethereum was one of the hottest narratives. And any OGs listening to this episode right now will know about AntShares. So AntShares, which is now known as Neo, was the Chinese Ethereum. That was the narrative. That's what people were calling it. And if you spotted that, you buy it and it just pumps. You don't need to know anything about the coin. You just need to know what the public perception is and why it's likely going to do well in the bull market. And then it's not just a one-off example. We had the same thing again with the Korean Ethereum. And that was ICX at the time. Everyone was hyped about it. Everyone just latched on to this perception, this story. And when everything's inflating, the fundamentals just disappear. They're way under. It's the story that matters. And that absolutely exploded. Now, why are we just talking about past examples? Bringing it over to now. The hottest narratives, the hottest trends out there. Metaverse, with Facebook changing its name, NFT, play to earn gaming, NFTs. That's what's really hot right now. Like, we've had a phase with also alternate layer ones being hot, like Solana, Avalanche, Terra. Now it's diving into the systems within the ecosystems within these new layer ones. So the Solana ecosystem, I think, is absolutely exploding right now. So many of the new projects are doing really well. And obviously caveat this with newer projects dump as hard as they pump. So you need to be really careful. Inflated valuations give you huge opportunity to make money very quickly, and then equally give you huge opportunity to lose money really quickly.
Right.
I'm going to stop rambling there. Hopefully that's helpful.
No, that's a great point. I mean, just not being tunnel vision to one thing or one asset, and knowing how other assets or other categories are doing can give you a huge advantage. If there's let's say there's 6 metaverse tokens, right? There's only 6 and 5 of them are pumping and they're up 150%, and one of them is only up 20%. Buy the one that's up 20%, it's most likely going to catch up and people haven't learned about it yet or whatever, right? If low market cap coins on Coinbase are pumping, find the next low market cap coin that hasn't pumped. You have a good chance of catching it. So I
think just saw that recently. An example right now. We literally saw that happen a few days ago, where Decentraland, it went crazy. Mana token, pumped loads. And then anyone who was watching that would be thinking, If Mana's pumping, what's similar to that? What's got a similar narrative? And Sandbox, obviously. So Sandbox, people
Yep.
who caught on to that will go look at Sandbox. And Sandbox did the exact same thing and is still pumping right now. And fundamental news came out. They just received 93 million in funding. So
Oh, wow.
keep
I
up to
didn't
date
hear
with the
that.
news. Look, keep up to date with the news. Look at these narratives, and you can see, like, you can catch it. Like, I love right now, and something I've been trying to do more recently is, as soon as we give these sorts of tips, that's why I was so eager to jump in as soon as you said it, is back it with a real example. Like, here's it happening right now. Go try, do this yourselves. Learn to do it yourselves.
Yeah. No, that's great. And I think the point you made was great too, is there's a lot of opportunity to make money, but you can also lose money very fast. So knowing what you're in and what you're investing in and where your stop loss is at, or if there's a stop loss, if you're on Uniswap or something, there's no stop loss. Like if I'm on Uniswap and I'm in a low market cap asset, I'm more thinking of how quickly can I get my profit or get my initial investment back? How quickly can I get out of this and reduce my risk? Because if anybody invested in Squid or the Squid Game token, it was up like 20,000% or something, and then went to zero in literal seconds. So on some of those low market cap assets, I'm definitely trying to recoup my initial investment as quickly as possible, reduce my risk, and then from there decide if I should let it run or take profit and whatnot. But yeah, that was a great point.
I can see why you take that approach. Personally, I use a different approach, wherein in situations like that where I can't quite control the risk as well as I'd like to, what I do instead is control my position size. So
100%.
If I'm going for a highly volatile, crazy coin like Squid, and say I allow myself, my portfolio allows me to lose $500 per trade, well, I'll just put a $500 position in. And with the multiples you get on these coins, you can easily get a 2 to 3x. So you don't need to up your position size anymore. Mm-hmm. And that's a great way of mitigating risk if you're trading on, say, like a decentralized exchange or any super low liquidity coin.
No, I completely agree. I do have a rule on Uniswap where I only put a certain amount in and I won't put any more. It's a small amount, less than 5 figures, and that's what I put in. And if it goes to zero, whatever, but I'm not going to, try to go big on a home run play, go put a 100K position on Uniswap and have no stop loss and have that one time I go big be the time that it goes to zero or goes down 60% on me or whatever and doesn't work out. So no, that's a great point. But anyway, so let's get back into this. I'm really more curious to learn more about you and kind of see how your daily routine looks like. But I do want to, I'm kind of curious, what actually made you start trading? Why did you want to start trading? What drew you to it?
Yeah, this is a question I haven't answered in a while. So I initially thought trading was absolute nonsense and no one could make money doing it, because my introduction was initially right out of uni. I was an entrepreneur. So my first business, I got a little lucky. It did well, and it made some good money. And then it ended because the opportunity went away and there wasn't really a margin for profit anymore in what I was doing. So I jumped to the next business, and every time, because I wasn't working a regular job, I'd make some money and then that'd be it. I'd need to find my next opportunity, find the next place I can make money again. So I was thinking, there's got to be a better way to do this. So being myself, I dived down the rabbit hole. I started researching, I heard everyone say, how do I get my money to work for me? But besides real estate, I didn't know about any other way to do that. Then I discovered investing, the stock market, how you can generate returns through that, how you can do macro portfolio management to create a system of wealth generation. So you kind of build this machine, which is composed of multiple different assets that can continue to generate revenue for you. And my first introduction to this was by a book called A Random Walk Down Wall Street. And I'm pretty sure it's written by the same people who founded Vanguard, which is well known for index funds. Don't quote me on that. It might be slightly off, but it's something on those lines. So they are very well known for diversified index funds. And these things approach the market in a way which assumes that you have no edge, that you can't outperform the market, and your entire goal is just to match the market's performance. And it gives you a whole host of arguments of why it's impossible to outperform the market. And I bought it because it made perfect sense. And as a mathematician, I was just like, okay, cool, this is great. Then 2017, I discovered crypto. And because I did all this and I had something nice set
Burn
up,
that
and I'm
book.
like, yeah, burn the book. I still think it's a great book that everyone should read. So many valuable lessons in it. But yeah, so 2017 came along, and one of my friends told me about the new internet, Ethereum, and how I should buy some. I bought some, and they absolutely exploded up. And I'm like, wow, I could get used to this. So I started diving down a new rabbit hole, and I thought, you know what, let's try some more active stuff. And I very conservatively, slowly started approaching the market, just running the maths through my head. I saw no way I could consistently make these returns, because I just compounded them and realized, like, if I could do this for 1 to 3 years at this rate, as I could grow like $500, I'd become a billionaire. So this isn't going to work out how I think it's going to.
I'm impressed that you recognize that. I don't think I definitely didn't initially. And I mean, I did after I started to see my unrealized P&L go away, but I didn't realize that initially. And I don't think a lot of people really consider that. Everyone just goes, oh, I'm making this much money now, I should keep making this much money because it's because I'm good at this, or because it's easy or something, right? Because why would anybody sell?
Yeah, definitely.
Why would anybody sell? There's no reason for anyone to sell. They should just keep going up. We're early, things like that. So that's pretty impressive that you actually realize that so early on.
Well, thank you. It's one of my strengths. I have plenty of weaknesses, which we can get into, but approaching stuff analytically and with pure logic, putting emotion aside, is one of my strengths, which is very nice for trading.
Wow.
Anyone who doesn't have that, you can also develop it pretty, not easily, but if you put the time in, that can be developed.
Yeah, I had to. That's awesome that's a natural trait for you, because again, one of my friends wanted to start getting into trading. I'm like, well, you have a good personality for it. And I'm like, I don't. So I had to be aware of that immediately, So I think a lot of people don't reflect themselves and see how they really need to react in the markets. They just take their personality and put it into the markets, and not everyone's built for that.
Yeah, there's self-awareness is huge for trading. Luckily, there's loads of ways to skin the cat. So whatever your forte is, whatever your strengths are, you can tailor your trading, your investing, your entrepreneurship, whatever it is, to your personality, to make it play to your strengths. So if you're a highly focused but impatient person, maybe tailor more towards day trading. If you are very patient, but you don't like spending too much time, you're interested in loads of things, maybe you look for a diversified portfolio of long-term investments. Like, you can tailor your personality's type, your strength to your trading, but obviously that requires a certain level of self-awareness. And anyway, to cut a long story short, we got into trading 2017, went very well, and I had too many data points to prove that I could outperform the market here. Maybe crypto's easy, maybe because I'm in a booming trend, that's why it's been going well. But whatever the reason, there's opportunity to be capitalized off here. And I've made multiple times the initial, so I'm going to continue doing it as long as I can. And I learned everything I know now for free, pretty much, on the internet from different people. So it's why I like to put a lot of free content out, teach people how to do the same myself. And that's how I got into trading.
Love that. Yeah, no, I appreciate all the free content. I think that it's great to have resources as well. And not very many people take the time. So we appreciate that. Do you have maybe like a number one tip for noobs that want to get into investing or trading? Like one, if you had to say one thing to one person, what would it be? Like one important thing. Put you on the spot.
Yeah, we can. It's a difficult question to answer, because it's such a there's so many skills you need to succeed at this game. It's so complex. But if I were to pick one thing and one thing alone, it would be to not focus on the strategy that you're trying to use in the market, because the strategy is so easy. You can just take a fully passive strategy and diversify your investments in any trending market and at least match the market. So everyone focuses on what indicator should I use? Where should I buy? Where should I sell? And that's about 10% of the battle. My number one advice is to focus on fully understanding risk and your own personal psychology. So if you understand risk management, you can stay in the game long enough to succeed. With crypto, anyone who hasn't taken a major downfall and stayed in the game since 2017 and hasn't been gambling would have done at least somewhat decently and would have struggled to have not outperformed the stock market. And then the psychology is like the ability to be self-aware, to stop yourself doing stupid emotional mistakes, because even if you understand the risk management side, it's like giving you a Ferrari. Now you're amazing at risk management, you have this Ferrari, but if your psychology isn't on point, you've got no idea how to drive this Ferrari and you're likely going to crash it. So my number one tip would be stop focusing on what magic strategy is going to make you a billionaire and really take the time to understand risk management and the necessary psychology to succeed in the market.
Thank you. That's great tips. I totally agree with that. I think risk management is the utmost importance because, like you said, as long as you can survive in this market, there's insane money making opportunities out there. So, but you just have to have the capital to be able to, get involved in these. So let's move on. Do you have? So this is kind of a fun question. Do you have like a best moment ever as a trader or investor? Is there something that like stands out to you where you're just like, like, oh my God, this is awesome. Like, holy, is there like one moment that stands out in your mind since you've been in the crypto market at maybe like a huge trade or a sweet investment or something?
There's a few, but the one which absolutely sticks out the most would be the ICX trade I mentioned earlier, because it was just everything I'd learned throughout 2017 coming together into this one trade that happened to play out really nicely. Because throughout that year, it was a very transformative one for me because I was learning that I can be more aggressive. Even though these highly qualified people told me that this isn't possible, I found a way to make it possible now. So I was learning that you can take on more risk. You can trust yourself a little more in this trending market. And as I picked up the narratives, like the Chinese Ethereum, now this was coming out, ICX, it had the Korean Ethereum narrative. I was seeing it all over my feed. And I thought, okay, so I've been so conservative all this time, and it served me well, but it meant like ant shares went absolutely parabolic, like 300x, and I only captured a fraction of that because I was so conservative. With ICX, I thought, you know what? I'm going to go very aggressively into this. And the second I could, I went as hard as I could into it. And it went from, I can't remember exactly, something below $2, maybe even below $1, to a peak of $15. And I went very, very aggressively into this right when the market crashed. And then as it went up, I cashed out as well. I told myself I'm going to cash out at something like $6, $12. And then the last target was $15, which I never hit, and it came back down. But like for the most part, it was a beautiful trade. It was a culmination of not actually learning risk management, but understanding risk. Now, because I was very careful with saying understanding risk rather than risk management, because risk is a tool. It's not something to just be purely conservative, because then you're never going to have opportunities for concentrated bets that are going to take your wealth up aggressively. And especially if you're a young person, if you don't have too many responsibilities, people who are relying on you, if you've got steady income, all of these things can give you opportunities to take risk. So if you understand when to take risk, and I understood like this is time to take risk. Mm-hmm. So looking back, if I had to pick one moment, that's probably the one which I'm most proud of, because it was just a successful application of so many learned lessons.
That's great. That's really cool. I remember buying ICX really cheap too, and it just took off. So that was crazy. Yeah. And then that made me feel like the whole market was going to just keep going up forever. And then of course that was pretty close to the end, and a lot of bag holders. But I think that you made a really good point. You did maybe go out of your normal risk standards, but it was a calculated risk. You understood the risk, but the environment was at play. You had done your research and you felt like this was a very high probability play to where you could take a shot. But I think a lot of people try to hit a home run every single trade, every single entry. And you were conservative and you were compounding and stacking gains. And then you found this one play to really hit that home run. And I think that anyone that does this for years and years and does it, successfully, they're not trying to hit a home run every single trade or every single day. They're getting 1, 2, 3 or 4 in a year and getting some big trades when the conditions are perfect. And then everything else is just kind of like bits and pieces here and there where you're just slowly making money. And I don't know if that's how you do it, but just from like mentors I've had and really experienced guys in the space, that's what they've always told me is, pick 2 to 3 plays a year to really hit. And then aside from that, just stick with your risk management and just kind of, build during those times.
Yeah, a lot to add to that and agree with on a macro level, fully agree with that. Like one of the things I struggle with is taking those high risk plays. I'm really attached to the fact, and I'm proud of it, but I also know I could have done better if I allowed for a bit more volatility. I'm probably one of the only people that's been in crypto this long and has a very smooth equity curve, which for anyone who doesn't know what that means like total portfolio net worth just goes up very smoothly and slowly with a few dips on some of the more severe crashes, but generally it's pretty smooth with very controlled downside. Now, great, but what that means is my upside gets highly limited relative to what it could have done. For example, just taking a play of like a coin you buy for $1. If you always sell at something like 50, 100x, you're never going to get 200, 300x's, which are very possible and do happen in crypto. Now, to what you said specifically, we actually had Sam Trabucco on the Market Meditations podcast. And for those who don't know, he manages risk at Alameda. And he's
awesome.
A terrific trader, extremely intelligent. It was a great episode. So much alpha leaked. And one of the key things he said, which I'm never going to forget, is that Alameda, about once every 6 months, has a trade that gives them as much return as 300 days. So these one trades can outperform 300 days of trading. And they learned this when the crypto market crashed heavily in, was it March 2020, I believe?
Yep.
So in March 2020, when there was the heavy crash, they did not have enough capital to employ a strategy which they wanted to employ. Feel free to check out the episode to remember exactly how it went down. But because of that, he missed out on something which would have made them 300 days of profit. And since then, they've very much been focused on that, finding those opportunities and switching the risk on where they can. Something I'm practicing myself and trying to learn, but getting better and better at it as we go along.
Yep, I'm the exact same way with Compound last year. Like you said, there were certain things going off. It was when the DeFi craze was going off, and I'm like, okay, here's my shot. I'm gonna go big on Compound. I think it was at $60, and then it went to 120, and I was in and out 2x in no time. And that was my big trade for Q3 of last year. So, but yeah, that's really awesome. Great content so far, Koroush. I appreciate all your tips. So now we just talked about your best moment as a trader. Do you have like a worst moment as a trader?
Yeah, definitely. So we spoke about how I'm suited to trading and how being logical and analytical is great. But so my personality type, the way I operate is a ridiculous obsession over whatever I'm doing at the cost of complete personal sacrifice. So I pick a goal I want to accomplish, and I will forego everything else in my life in order to do that. So in 2018, I built a trading system which for 3 to 4 months was doing fantastically. I was scalping on the 5-minute chart, and it was making me like 4 figures per trade, which at that time was so much money to me. And I don't say this to brag, but just for most people, that is a lot of money.
That's good. Just on a 5-minute chart, 4 figures per trade is good money though, too, yes. Because, there's liquidity things that come into play.
Precisely. It was a very unique opportunity, and I knew it wasn't going to last long. So what I did is I set alarms all throughout the night. So I would wake up like 8 times every time I went to bed to an alarm. I remember I went to stay at my girlfriend's parents' house, and I slept downstairs next to the kitchen, so my laptop could have just the alarms go off and I could wake up and take trades. That's how ridiculously obsessive I get. So I gave myself insomnia for like 2 years because of that habit. And at one point, when I was mentally weakest after like 4 months of doing this, I got emotionally riled up because of something that happened. And I hopped on, and I remember I believe it was EOS chart. And I was just going sideways on a really bearish day. and I just dumped about 20% of my net worth or some ridiculous amount of money just onto the chart because I was pissed off and I was determined that the market would make me $1,000. I just wanted to see it go up to like 0 point something percent so I could take my $1,000. And I was just upset. Like, it wasn't logical. It wasn't rational, but I just like destroyed my own psyche because of what is normally my strength. Mm-hmm. And yeah, so that happened. Luckily, I got out relatively unscathed, took a little bit of a hit. And that was when I learned, like, okay, time to put health first, because however much money I make, like, this is one of the worst things about being a trader. You can just throw it all onto one trade. Like, nothing is stopping us putting every single bit of Bitcoin we have leverage long because something crazy happens one day. You just reach the pinnacles of stupidity or depression or anger. And yeah, if we want to survive this game long term, this is why, like, people hate the topic of psychology because they're like, oh, this isn't going to help me get rich. But man, it's the most important thing. And I can't stress it enough, because if your psychology isn't on point, who cares how much money you make? You're going to lose it all inevitably over the course of a career.
So true.
But yeah, that was my worst moment for sure.
Wow, that's interesting. That you had an addiction, Koroush. So the first step to solving your problem is admitting it. So actually, This is an intervention I've put together. It's not really a podcast. So let me bring up the team. Come on, guys. Let me get everyone in this conference call.
All my loved ones just turn up.
Yeah, I've already been talking to your parents, and your girlfriend's parents actually are the ones that asked me to set this up.
Oh, that's hilarious. It's not possible right now with the amount I work.
That's awesome. So, but you did talk about like taking care of yourself. So is there like a morning routine you have? Do you have like a set start time where you will not get on the charts or get on your computer before? Do you have like in the morning?
Yeah, absolutely. So I'm pretty obsessed with self-improvement, and it's taken different forms throughout the course of my life. There was a time, like that trading time, where, you know, sleep was for the weak. Real hustlers don't sleep. Like, I had this very primitive mindset and approach to it. And after that incident and a few others, I realized, like, if I want to succeed and perform to the best of my abilities, help has to come first. Like, help is what's actually going to let me perform better. Who cares if I'm working twice as long if I'm less than half as efficient as I would be? And as you start doing certain things like brain training and meditation, which I'll mention in a second, which is part of my morning routine, you get to very clearly see on what level your mind is operating, and you become very aware of it. And that's when you notice, like, what sugar does to you, what not sleeping well does to you. Let's start with the top thing about my morning routine. It starts the night before. Trying to go to bed at the same time every night. Like, that is one of the hardest things to do, because just one night of socializing can throw that off balance. But the most important thing you can do for your sleep is try to sleep consistently at the same time every night. That's more important than quantity.
What time do you go to bed every night?
12 o'clock is when I try to go to bed. Between 12 and 1 is when I go to sleep. I'd like it to be a little bit earlier because I like waking up with the sun, but I train Brazilian Jiu-Jitsu quite late at night, so I can't go to bed straight after that. And that's a big part of my routine right now.
Oh, nice. Yeah, riles you up, I'm sure.
Yeah, definitely. You get pretty hyped up after that. So yeah, this is my morning routine right now, and it's pretty robotic and religious every morning. I wake up, I have a small snack like a piece of fruit or a protein bar and some tea, normally non-caffeinated, but on day I need a boost. I very selectively use caffeine, say 2 to 3 times a week. Then I will go and I will do about 10 minutes of meditation study, where I look into some good meditation teachers, some materials that they have. For anyone listening that's curious, my top recommendation would be The Mind Illuminated. I think I've got a copy behind me, or that's across the room. The Mind Illuminated by Kuladasa. He's a PhD neuroscientist, I believe, who went over to meditation, and he's broken it down in a beautiful way, which really teaches you in a systematic, non-like scripture-like way how to meditate, how to train your brain, and just live a better life through it. Meditation is just the art of living with full consciousness and awareness, which is amazing and highly recommend for everyone. So that's the first thing I do, and it's something which hopefully will be a part of my life forever. Then afterwards, something I've introduced recently is brain training. So that initially took the form of I would do a lot of high-level high school mathematics papers, so like more difficult high school mathematics papers, because you can do them in a very short amount of time and they train your brain. But that was a little bit linear, and I wanted to try something a little bit more all-encompassing. That's when I found an app called Luminosity, which has language tests, reaction time tests. I don't know if you've heard of it, but yeah, it's fantastic. And I've been doing that now for 25 days. And I've really noticed a significant improvement in my ability to remember things, my ability to pick up new information. For example, when I train Brazilian Jiu-Jitsu and the instructor teaches a new move, I find myself able to store more information and pick up patterns a lot easier since I've been doing it. So highly recommend that to anyone.
Said that's an app called Luminosity?
Yes.
Okay. I'm going to try that. That sounds cool.
10 minutes a day. They're like fun games, but challenging ones that test different skills,
awesome.
Which, highly recommend that.
Cool.
And then we move on to, it's a very structured morning routine. Then I move on to reading. And this will be what I'm very deliberate about how I read. So it's nonfiction. It's stuff which I can apply to my life. And I specifically focus on books which help me with something I'm doing right now. Because absorbing information is good, but you don't really learn it unless you can actually apply it and solidify it with experience. So right now I'm reading a book called The Art of Learning. And this was, the author's name escapes me right now, but he was an incredible fellow that was in his teens from as young as like 10 years old, the US chess champion and a world-class competitive player, and then moved on to learn martial arts and compete in like 7 world titles. So really awesome. And so that book is on the art of learning, because right now I'm trying to learn a lot of new meditation type stuff, a lot of stuff with regards to Brazilian Jiu-Jitsu, and a lot of stuff with regards to the crypto market. So things which help me learn faster. It's very useful, something I can apply directly. Then after we finish our reading, we move on to the workout for the day. So I normally work out twice a day, once in the morning and once in the evening. And this workout will be about 1 hour long to an hour and 15 at most. Finish the workout, have a big breakfast, and then we enter the market checkup, where I take a look at the market, get caught up in all the news, the recent price action, calibrate myself for the day, do some journaling, plan what I'm going to do, what am I going to trade today, what meetings do I have, what projects do I want to focus on today, and then we attack the day. That's the full morning routine.
Do you have a certain time that you log on at?
Yes, so the morning routine will start around 8 o'clock, and it will be done, if I'm good, by about 10:30 to 10. So 10 if I'm very efficient and I get through everything like on the dot, and then 10:30 if it's a little bit late, and then I'll work after that up until 10 o'clock, let's say, and then I try to finish at 9 o'clock when I can, or even better, 8 o'clock, the dream. But normally right now it's 10 o'clock. I'm trying to scale that back, maybe after the bull market.
Yeah, financial freedom, man. You don't have to go to a 9 to 5. You just get to sit in front of your computer at home for 10 hours a day, right?
Yeah, 12 hours, but yes.
Yeah, 12 hours even. Yep. So my wife, I know, I definitely spend extra time on the charts sometimes when I shouldn't be, especially like you said, during the bull market. Right now, it's hard to get away from it because you can catch a 10% pump on low time frames rather easily now. I don't want to make it sound easy, but because it's not, but you can catch these pumps pretty quickly when you see momentum starting to build. But anyway, so yeah, that's really cool. Thanks for sharing your morning routine. That's, I think, way different than a lot of people think, or a lot of people don't even focus on that kind of stuff. So it's really good for people to understand that trading isn't just about what's on the chart. It's about what's in your head and how you're performing. Because I would say that some of my worst days trading are when I'm just tired or I'm overtired, mainly because my son probably didn't get sleep the night before or something and kept me up. But making sure that you're aware, like, oh man, I'm extra tired today. I probably shouldn't be trading, or I'm going to take the day off the charts because I'm tired, or I'm pissed off at something that my friend did or something that happened and I'm stressed now and I'm not in the right mind frame. So I don't think a lot of people really consider that kind of thing, and they'll, trade in poor conditions, and that's when you have these setbacks.
A lot of people think the goal of self-awareness, of meditation, these sorts of practices is to become perfectly zen-like and no longer get angry or annoyed or tired and operate perfectly. But it's actually so much less, but also so much more than that. It's simply being aware of it, because once you're consciously aware of it, you can make deliberate decisions while taking that information into account. So I know that I trade really poorly when I'm hungry. So I keep a snack like protein bars, but at my desk always. So if I'm aware that I'm hungry right now, if I'm about to pop into a meeting, if I'm about to record a video, I know I will perform less optimally. So I just need to be aware of that. Take a bite of the protein bar, or if I don't have time to eat, I just need to be aware of that going in and then double down on my willpower to perform really well. That awareness is a superpower, and it's hard to explain it, hard for anyone to understand until they've truly experienced it.
Wow, that's gold. Can I get some recordings of you saying motivational things for when when I need an extra boost during the day? No, I'm actually not a huge book reader, but I did read a book called Managing Your Emotions, and that's literally one of the things they said that really stood out to me was everyone has emotions. Don't suppress your emotions. Don't hide them. Don't run from them. We actually are better if we understand our emotions and are aware of them, and then we use them, or we, I guess, adapt to them or what they are. So listen to what your emotions are saying. Don't ignore them. And you actually might come out ahead. Like, it's like your girlfriend is mad at you and she's yelling at you and you're ignoring her emotions and you're ignoring her needs. And what's that going to do? She's going to get more mad at you, right? So rather than ignoring that, you're going to say, okay, how are you feeling right now? I need to acknowledge your emotions. And then she's going to be like, oh, I'm appreciated. I'm cared about. Okay, you're acknowledging my emotions. Thank you. And then it's all, so running away from emotions doesn't work out in trading. It doesn't work out in relationships. So some people are getting awesome dating advice and like, oh man, last night when my girlfriend was mad at me for something that I did that pissed her off, maybe I should be more aware of that next time and be nice. But yeah, anyway.
So when we get angry, it's very hard to stay angry unless you continually think thoughts that make you more angry. So it's more like a continual trail of thoughts. But as soon as you focus on the sensations of anger and your mind no longer has the ability to tell that story of anger, it's very difficult to stay angry for more than 10, 15 seconds. So it's exactly like the example you're saying.
Yeah. So, yeah, this is cool because I just started meditating literally because of what you've been saying. So I've been trying the Headspace app, which is, I feel like it's meditating for beginners anyway. But it does make you aware of your thoughts and aware of what's going on and actually thinking about what you're thinking or what you're feeling. And I never even was conscious enough to consider that before. And actually, I was really pissed the other night because in fantasy football, I lost by 0.2 points because last minute before the game started, I put in a player that had 0 points and I lost by 0.2 points to one of my friends. And I was pissed off. I was like, God, I was mad and I was heated. And I'm like, so I sat down. I'm like, okay, that's a game, first off. So why should I even be mad? And I'm like, who cares? I'm not going to even think about this by next week. So why be mad? Why be upset? I could have gone and rage traded or something, I was just mad. I don't even know why I was mad. Now I'm like, well, that's kind of funny. Good on my friend for beating me by 0.2 points for me being a dumbass, but like you said, I acknowledged it and I was like, okay, why am I mad? I have no reason. It's a game. Who cares? Don't be mad. And then I wasn't mad.
So anyone listening will think that's not a big deal, right? Whatever, you didn't get mad.
It was not a big deal.
Imagine that. But imagine that now for the rest of your life. Every situation, whether it be low stakes or high stakes, if every small situation with a loved one, you respond with awareness and empathy. And every time they like you 1% more because of that, the relationship gets 1% stronger because of that. Or there's a pivotal moment at a work interview and you manage to switch on that awareness. It's life-changing stuff, but it's hard to see the value in it without experiencing it yet, like you have.
Well, yeah, I mean, I could have gone and been pissed off and been rude to my wife, and then she's mad at me,
Yeah,
you know? Like I could have been rude to my friends or cussing, you know, just been like,
yeah,
there's so many, you're right though. It can project so many other negative things. I could have sat down on the charts and been like, oh, I'm annoyed, you know, let me find a big trade so I can make money. And, you know, so it's just a whole encompassing thing and I keep saying it, but we just don't think about it and nobody really talks about it. So it's really good to have this awareness because the markets are literally a psychological warfare, basically. I mean, the
yeah.
markets literally run off emotions. So, but yeah, so let's actually get into what makes KoroushAK a trader. So I really am curious, do you have any like special like setup? Do you have like 10 screens or like a certain, you know, keyboard that you like to use or, you know, whatever? How does your setup look in your office?
Yeah, I mean, I've got a special keyboard which actually is split in two right now.
Oh, wow.
Um, yeah, yeah. So this is a ergonomic
That's some
keyboard.
jujitsu shit. You're like,
It actually is because of jujitsu, because jujitsu puts a lot of strain on your joints. So what was happening is the typing was starting to really hurt, and even my mouse looks really weird if you look at
oh,
it.
I've used one of
So
those.
specifically go for, and obviously my chair as well, they're ergonomic, which means they're designed to put less strain on your joints. They're designed to be a more natural fit. I don't have 100 screens. I mean, I've had long periods of time where I use nothing but a laptop. Right now, I've got an ultra wide screen connected to a laptop. I don't think you need multiple screens or any special trading setup. At most, like having two screens is very helpful because you can have a chart up, a news source up, your trading platform up. You can have multiple charts up more easily, especially if you're an intraday trader. You need access to charts a lot more. If you're a long-term trader, maybe not as much. But yeah, there's nothing really special about my setup. I actually try to keep it as basic as possible. The only reason I even upgraded to these fancy keyboards is because it benefits health quite hugely.
Cool.
Yeah, that would be my answer.
That's awesome. I've never seen a keyboard like that, so that's pretty cool.
Yeah.
Did the lights help with anything, or are they just for looks?
No, they're
Just
just
impress your
pretty.
no coiner friends.
Yeah, yeah, it makes me feel special, like I'm in a spaceship.
They're like, are
Um,
they mood lighting? You're like mad and they turn red, and then if you're like happy,
yeah,
they turn green, and you're like, ah.
these these headphones were made by Zuckerberg, and they just read my mind, and then the keyboards just adapt to them.
Metaverse. That's funny. All right, so let's go ahead. Let's share your screen and let's pull up your browser and show us
Yeah.
like what is the very first website you log into in the morning when you get ready to start trading. Do you have like certain websites that help you trade that show you special, you know, data points or anything like that? Because obviously, I assume you use TradingView.
Yeah, guys. So the first thing I do is I want to be up to date on fundamental events that are going on in the market. My team will send me something like this. What's hot? What are people talking about? What have I missed? What do I need to be paying attention to? And we share it on our newsletter, Market Meditations. You can find it on Substack or Twitter. We also post updates from the Twitter as well. That gives me my fundamental perspective on the market. I've actually got people that give voice recordings as well. We're analyzing lots of different spaces. I get people produce data reports for me on on-chain analytics using platforms like Nansen, and it really gives me an all-encompassing view of the market that's varying degrees of detail. For example, at the start of the week, I like to get a lot of information, really set myself up, and then Tuesday it'll be lighter because I'll be using most of the information on Monday to calibrate myself. Wednesday will come on a little more hard. And then as a day-to-day thing, what I like to do, which will be much more applicable to users, which will be much more applicable to listeners right now, is just open up whatever exchange you use. Like the one I like is FTX. I know this podcast is sponsored by Themex. They're also fantastic, great product. I've met the team. I've worked with them. They're ambitious and they're building some amazing stuff. So hop on to your favorite exchange. And then I like to sort by volume. So firstly, what by volume are the coins people are most interested in? And right now we can see Ethereum because it got up to like 4,600 today. And I'll look through at the daily changes, see if anything pops out relatively. So if everything is zero and Ethereum goes down 2%, I want to pay attention. I'll click on Ethereum and see why has it gone down 2%? What is interesting over here? And then if I want more detail, I'll go to TradingView and start doing my analysis, updating my key levels and planning around that. But as we can see right now, everything is going 2%. And this is where the relative part comes in. So if everything's moving up and down 2%, I'm going to be a little bit less interested in what's going on there. And what stands out to me is something like Radium over here, or something like Atlas. Now, we spoke earlier about the metaverse trend that was super bullish on play to earn gaming. And I'll look at Atlas, and you can see that it's actually had a breakout over here. The 0.12 level. One of my favorite things to trade are breakouts. I'll identify key levels like this, set alerts, and then when I see a key breakout, I'll look for a retest play, or I'll just buy if I think it's going to continue going up without going down. I'm actually going to take this opportunity here to explain to people. We spoke, me and Gooner have spoken a lot today about catching these early pumps, these hot narratives. But I mean, look, this exploded up to 0.28 and then crashed down well over 50% to 0.06. With every pump comes a huge crash. But if you identify the trend, you know, and you have conviction in Star Atlas, it's got the NFT narrative. And I don't own any of this coin, by the way. It's got the NFT narrative. It's got itself a strong team, decent fundamentals, listed on a big exchange, and you spot the breakout over here.
Going all in right now.
Confluent leverage, multiple factors lining up, then it's probably going to do well with the right setup. And if it doesn't and you lose, well, try to just do the same thing again over time. And it's about the net outcome, not just the one individual trade. So yeah, after I get calibrated on the market, that is a rough idea of my standard routine, going through the charts, getting my calibration on the market. The only thing I guess I missed out is Twitter. No crypto Twitter trader doesn't have some point in their morning routine looking at Twitter, scrolling through, seeing what's hot, what people are talking about. And there's actually a surprising amount of alpha that you can get just by paying attention to what's going on in Twitter and following the right accounts like NebraskanGooner, of course.
Of course, you better follow me if you're watching this. Yeah, so the point you brought up about you take setups over and over, and if it doesn't work out, fine, you find the next one, right? So when you've been in the markets long enough, you'll start to see things that just keep happening over and over, like patterns or certain breakouts or whatever. Or even you'll see the same breakout on 5 charts, and then you'll see a 6 chart that looks the exact same and hasn't broken out yet. But point being, if you see these patterns over and over, you just start taking them. You just start basically systematically, not even thinking about it. You're like, oh, I see this, I do this. I see this, I do this. And it might not work out every single time, which is to be expected, but it should work out more often than not. And that's how you make your money. It's not by being right every time. It's just by being right more often than not, and knowing that 75% of the time, if this happens, then this is going to go up.
Yeah, it really is about embracing uncertainty. That's something people struggle with trading, because as humans, we don't like uncertainty. We don't actually like risk, and we like to look for answers, even in things which don't have any answers. There's lots of studies we've seen with people showing someone a chart going up and down and up and down, and they don't tell them what that chart is, and they tell traders to draw patterns on it. Well, the chart is just a coin flip going up and down. The traders can draw a million different patterns on it. So I don't know quite where I'm going with that point there specifically, but it's just we look for patterns and we try to look for certainty in uncertainty. So if you accept that you're probably not going to be right all the time, it's a bit of a superpower, because it makes you suddenly realize that, oh, I have to manage risk. Because if I'm guaranteed to not be right all the time, then if I'm wrong one time and my risk isn't managed, it's over. So embracing that uncertainty, looking for a good process, not a good result, is one of the most important things for not just trading, but any high performer. If you're an entrepreneur, your first business probably isn't going to work out. It's not about that business working out. It's about applying the right principles when you launch that business, learning from what went wrong, and then trying again, because that focuses on process, not on outcome.
Great point. Yeah, that's awesome. So do you have a watch list that you've constructed Because I saw you look
Yeah.
at volume daily. Do you actually have like a watch list of assets that you're focused on?
Yeah, so my watch list of assets will be a lot of. So my watch list of assets changes quite a lot, and
Okay.
that is based on I've got like a macro filter of what narratives are hot right now.
Gotcha.
Within these hot narratives, I build up assets which I think will do well. So it'll be like I noticed that right now it hasn't happened yet, but for example, BNB and FTT are not on my watch list. Why? Because I don't think the exchange coin narrative is hot right now, and it's not kicked off. I think layer ones are hot right now. That's why AVAX, why Terra, why Solana, and a whole bunch of other coins are on my watch list because I love that narrative right now.
Cool.
Then, if I notice Binance Coin explode or Coinbase get another crazy valuation or event happen around Coinbase, I might be like, oh, okay, time to add this filter to my watch list. And I found that to be highly effective in constructing a watch list. The things which will normally be there are the majors. So I'll always have the majors on my watch list. I'll be Bitcoin and Ethereum. Like they're the kings. Bitcoin is a great trigger for the overall market. Ethereum is really useful for analyzing the sentiment of the altcoin market. And then separate to my watch list, it's not technically a watch list. Obviously, they're assets which I have long-term investments in. And periodically, I like to update on them. So that will be once a week for medium-term plays, once a month for super long-term plays. I'll just look at every single asset I have, whether my original thesis for investing holds true, whether I want to change my approach to it. So those would be like the multiple layers of watch lists I have.
Okay, so is there anything you're watching right now, like that's really high up on your watch list?
Right now, Solana, 100%. 100% paying attention to Solana and the Solana ecosystem.
So what are you looking at in the chart right now for Sol?
So
why is it on your watch
right
list?
Now, we've got a huge breakout. I mean, I was watching for this breakout right here. Notice we had a top. Price went up. It hit. We've got a double top at around 216. You can be a bit more aggressive at around 210. So the price goes down. And let me get a chart to show people. I'll leave some heavy alpha here. Yeah, give the people the alpha. So here we set our breakout level. Now, why do we select this level here? Like I said before, notice the price made a top there. Initially, you could set it out even lower over here at around 190, but for the purposes of this video, we'll set it over there at 210. Then let's go down to the 1 hour. So we've used the higher time frame to set our lower term level. And now, this is going to be a perfect example. Take this out as well. So before the first break, let's bring in a low moving average.
Did you just remove
sub 10?
Oh, you're doing the replay. Okay, sorry. I was like, did you just remove those? But you're doing replay. I see it now. I don't use that often. Okay, keep going.
So we've got the price down here, and we can see an exponential moving average below the price. Now you can use multiple things as triggers for the breakout. You can use a close above a certain level. You can use exponential moving averages. You can use going up and then staying above a certain Fibonacci retracement. For this, we'll just use the exponential moving average. Now pay attention here. Price goes up. Now, a lot of people will use the close as a signal to enter this position. So price closed above that. Now, our system tells us not to enter. Why? Because we're waiting for the exponential moving average to get above before we enter.
Oh.
So we wait. And it's a lagging indicator, but what it does is it helps stop us entering prematurely too early into trades.
Which moving average is that?
So specifically, what I like to emphasize for most people is don't worry about which one I use. There's no sense whatsoever in copying my one. Just know that it's a lower time frame exponential moving average. Understand that all that does is give you one data point and then backtest it. So pick your moving average and backtest it. That's something I like to try to be quite adamant about. And we'll give it some time.
So for those that want to learn more about moving averages, my last trading trench was with Big Cheds, who is a very big believer in moving averages.
Yeah, so we'll go back here. I just skipped forward.
Yep.
And we can see that this signals the real breakout.
Wow.
So on this candle here, we've spotted the price is broken out. Now we start to look for an entry on Solana. And if you entered, say, on the close here, you would be up a little bit right now. You'd expect continuation, but it lets you get really safe entries into breakout type plays. So build that system and help get breakouts. And that would be the play for Solana. You were asking specifically what I'm watching. I'm looking for projects on the Solana ecosystem because, look, we've got the metaverse trend right now. We're looking at the metaverse trend right now. We're thinking NFTs are hot. NFT marketplaces are hot. Play-to-earn games are hot. But it's really expensive on Ethereum right now. The average person cannot just go out and buy an NFT because they've got to pay like $200 of ETH fees before they can even pay the fees to pay the money to buy the NFT. Just the other day, like I do a lot of yield farming. I had to spend $1,000 worth of ETH just to withdraw my profits from a yield farm. I can do it because I'm in a fortunate position right now, but the majority of people can't even touch that. And the market is not willing to wait for Ethereum to catch up with what it wants right now, which is NFTs, which is more play to earn gaming. And Solana is the ecosystem I'm watching. So much development is happening behind the scenes. Recently, a huge marketplace came out called Magic Eden. The UI is slick. It looks amazing. And that is a project I'm super bullish on because it matches so many narratives. The layer one narrative, the Ethereum is too expensive narrative, the metaverse narrative, the NFT narrative, like all of this stuff comes together and makes it like, oh, now this is going to be a high conviction play for me. So I'm going to be paying more attention. There's a few other projects. I don't need to mention too many names. It's dangerous mentioning project names in case one doesn't do well and people invested in it because they heard you vaguely mention it one time. But a lot of projects I'm paying attention to, gaming projects, on the Solana ecosystem, on cheaper than Ethereum ecosystems, whichever one you want to pick, study, learn. That would be my top play right now.
Very cool. So do you have like a set risk management strategy like that you go to, like maybe a certain percentage of your portfolio or like a certain max stop loss on trades, or how do you manage your risk specifically?
Yeah, so as with everything, I've got a multi-layered approach to this as well. So I've got my overall portfolio management. And then to every asset class, crypto, stocks, property, commodities, real estate, for every asset class I have in my portfolio, I attach a certain level of risk. So that's one form of risk management where I know crypto is more risky than real estate. So if I'm holistically managing the overall risk and volatility of my portfolio, I know that I can move it up and down. If I've got more in real estate than I do in crypto, the risk is probably a little bit lower. But if I've got more in crypto, I'm a little more risk on. And based on overall market conditions, based on my personal circumstances, I adjust that risk. Now, we go into crypto. I've got multiple different segments of risk within that. Investing, trading, specific asset classes, yield farming, all of this will be split to multiple layers of risk as well. And when it comes to trading, I attach a risk to that based on the data of my system. So if my trading system has a lot of volatility to it, it goes up and down a lot, it only does well in bull markets, that sort of system would be a very high risk system. But if I've got a more stable system that just trades intraday and pretty much works in most market conditions, that will have less risk attached to it. So I'll manage, again, my holistic risk by managing the risk within these categories. And then for each system, risk has to be managed independently. So if a system has very high variance, and what that means is the amount you can make and lose fluctuates a lot, you don't want to take too much risk because this is a pretty important concept. So this example is going to be really helpful to a lot of people. So take this graph over here. This is your equity curve. That means how much your portfolio is worth. Here, we'll say $1,000. Here, let's say $10,000. Come on, there we go.
Beautiful.
That'll do. So we've got $1,000 and we've got $10,000 over there. This is your portfolio going up. So a low risk portfolio will look something like this. So it just goes up, a little bit lower, a little bit higher. So this is a low risk portfolio with very low standard deviation from the mean. The variance is very low over here because most of it is within this boundary over here. Okay. So now that's a low risk system, and you can afford to take bigger bets on these trades because if you take bigger bets, it'll just look a little bit more zigzaggy when it goes up. But if you've got a really high risk system, the cat that makes a big win and then loses for ages, and then makes a big win and then loses for ages. Notice how the variance is way higher over here. So if you take a big risk on this trade, what the bigger risk does is increase the downside potential. And notice, you can go as high as you possibly want, but the downside, as soon as you hit this, it's over. And also, the more you come down, the harder it is to go up as well. So that is how I approach risk management to systems. I calculate how much variance there's going to be within the certain system I'm using, how much fluctuation I expect, how many trades I expect to lose in a row. And based off of that, I will control the max downside. So a system like this, I'll probably less risk like less than 3% per trade, maybe 1% per trade. On a system like the previous one, maybe I'll go as high as 5%. Maybe I'll, so those would be more generic numeric trading systems. Now, there are more holistic bets I make, which fall outside of this general realm. But if you're talking traditional trading, this would be how I manage my risk.
I'm more so doing that on very small accounts where it's going to be high risk, high reward. But like on my large main accounts, I want to see that nice steady growth trend and be more risk averse to those and be, playing it more safe and see large steady growth on a large account over time. Whereas I think a lot of times on Twitter, we see insane P&Ls that'll be like mega green. And then you'll see a mega red P&L that somebody shares. And it's like you just undid 80% of your profits on this one trade. And now you're hoping that your next trade is, again, the market agrees with you and goes up bigly. And then your next trade is giant again. So for me personally, I don't think that's necessarily sustainable, especially if you're doing it with your main account or large capital.
So the traits that lead to extreme short-term success often contradict with the traits that lead to sustained long-term success. And in trading, we idolize get-rich-quick stories. And sometimes these are done with good risk principles. Like the person took a very calculated high-risk play and made money. But the average person doing this is taking an uncalculated gamble in which they hope to get rich really quickly. And it's not a good sell to someone who's not a good place in life to tell them, hey, don't try and get rich quickly. There's a low probability it's going to happen. Maybe take the more sustained approach, which requires you to do the opposite of what it would take, which requires you to have a lot of patience, which requires you to really study and learn what you're trying to do, how to go about doing it, make detailed plans. Like all of these traits contradict with what it takes to make a lot of money very quickly, which is take a high amount of risk, take unsustainable bets. Like that's what's required. But most people aren't Alameda. They can't spot that 1 out of 300 trade. No,
you're totally right. And I think we're a lot of us maybe in crypto because we do kind of have that gambling edge to us. We kind of like the gambling aspect and the high risk aspect. And I think it's totally fine to have a small account or have like a gambling account where you just go and log in and you throw 100x leverage on and you hope it works out. That it's fine if you're doing that and getting those habits out safely, whereas you're losing very small amounts if you are losing, and getting that and, scratching that itch, if you want to say it. But like you said, for long-term sustainability.
Push back on that a little bit. I think the market is an expensive place to get your frills. I mean, who in their right mind would enjoy just sitting by themselves, almost certainly losing money? I don't know, go to a casino,
right?
Have some fun at a casino, play some roulette, play some blackjack, play some poker. That's going to be a lot more enjoyable. And at least you go there with the expectation that you're going to lose money. Like, it's like saying, if you're this isn't the best example, but if you're going to the gym to train, but you like doing stupid exercises, once a week, come in there and do stupid exercises. Like, cool, you get to do stupid exercises, but that's not really going to help you get to your goals. And if you want to do stupid exercises, why not go play a fun sport instead of stuff that's is so just inferior in every way?
Yeah, to clarify, I'm really not like promoting, just going on and degenning, but it's more so like, we see people making ridiculous returns on crypto, or we see people like oh, this thing went up 2,000% on me. Like some random meme coin. So like Uniswap is where I kind of get like my like high risk crypto like fix. Like, okay, I'm just going into these shit coins with $1 million market cap, which could go to zero, but they could also go to $10 million market cap and I can 10x a small stack, you know? And so that's kind of where I get like
I'll give you that.
My crypto fix, my kind of gambling fix in crypto is on Uniswap with small amounts, just kind of, you know, like, oh, bunny butt coin. Okay, screw it. I'll throw a small amount in there, but I'm not throwing, 20% of my net worth into bunny butt coin or whatever the hell these are, hamster face coin or something. So I think a lot of us get caught up in seeing people make like insane amounts of money on stupid coins that have no fundamentals or whatever. And so we start to like want to be a part of that, right? Or people like want to get involved in that and they go too heavy. And that's when they really start to run into problems. So having that kind, like, we're drawn to crypto because of how much money you can make and all these 1,000% gains, but you need to know kind of how to manage being involved in them, because it's not realistic to put $200,000 into these shitcoin meme coins and have them all go 500%, right? And consistently over and over. So at some point they just become a cash grab and you start to see these things all go to zero. But yeah, I mean, that's awesome. I think, let's see, I don't really have many other questions left. You already said you keep a journal. You've already talked about your rules. That's awesome. So I do have just a couple more questions before we wrap this up. Do you have a favorite indicator that you like to use when you're trading and charting? Is it your EMA's strategy that you showed, I guess?
Probably moving averages. Like, I don't think indicators are essential at all, but moving averages is just a really beginner-friendly way to get an idea of the trend and how strong the trend is in a market.
Is there any like tips you have for people that are trying to use moving averages? Because I don't think these are something that a lot of beginners really are taught about, or, everyone knows about RSI or whatever. But I don't think moving averages is really talked about for like newcomers.
My tip is, so a lot of people misuse indicators where they think that there's some sort of magical property to them. And it really isn't. The indicators are just a representation of what's already on the price chart. So what you want to do is, whatever the indicator is, be it moving averages or RSI, make sure you understand the formulas that make up that indicator. So why is the RSI the way it is? Why are moving averages the way they are? What is the calculation that goes into that? And then you understand what that is derived from on the chart. And then you can have a really intuitive understanding when market conditions change, when when you have like a cool hypothesis, you can correctly apply those indicators rather than thinking like, I don't know, the moving average is a special support that always holds. You really want to understand what it is and why it does that.
Yeah, that's a great tip. I appreciate that. Is there any other indicators or like anything on the charts that you think, anybody watching this could take, advantage of?
My favorite tools are moving averages, Fibonacci levels. In the past, I've created systems which incorporate other indicators, but really my biggest tip would be to, if you use an indicator, understand it, and also don't think there's anything magical about any indicator out there. They're all just formulas that derive something from the price data.
Yeah, except for Top Goon X, right? I'll give you another $10,000 to say yes. No, you're right though. I mean, I think every newbie starts with like I remember getting a free trading view chart or free trading view account and like didn't have enough indicators at the start. Now I'm like, I use like very minimal, like you said, moving averages and whatnot. So that's awesome. All right, Koroush, I got one final question for you before we take off. What is the biggest lesson you have learned from trading?
The biggest lessons I've learned from trading, I'll recap from what I said earlier. 2 ones I'm going to take away. Firstly is to really understand risk and apply it to your life in a dynamic way. You can really view everything as risk to reward. And there are times where you want to up the risk, like say there's a pretty girl at the party that you want to talk to, but it feels extremely uncomfortable and the risk is your mates make fun of you. It's got good reward if you pull it off. So maybe you take that sort of trade and you can view everything like that. That's a fun example. More serious ones can be applied to career, your life. Really analyze risk to reward and understand that it's okay to sometimes lose if the reward is worth it. And the second one would be the health aspect. Like, you never care about your health until it's gone. Like, it's so common, and I'm sure countless people listening to this will just brush this piece of advice off. But guys, like, my aggressive trading, where I woke up, has given me what might be lifelong problems with sleep. I had severe insomnia for 2 years. I still struggle with insomnia and sleep. No amount of money is worth these sorts of health issues. So try to always, regardless of the potential money you can make in crypto or anything else, put your health first.
Well, Koroush, really want to thank you for joining me. I've learned a ton. I'm sure my viewers have learned a lot as well. I just can't thank you enough for sharing all that alpha. If you're watching this, make sure to thumbs up, make sure to subscribe to my YouTube. And not only that, make sure to subscribe to Koroush's YouTube. He puts a lot of educational content out there. Check out his market meditations newsletter, and follow him on Twitter as well. Koroush, thanks again, and I'll catch you later.
Thanks a lot, Gooner. It's been an absolute pleasure. You're a great host. Thanks for listening, everyone. I hope this delivered value.
Peace.